car payments skyrocket, credit card debt surges, and average car insurance payments up 27% in 2 years. Hi, it's Edward, back with another video. Please take a moment to click the thumbs up button below and consider subscribing to the channel. Please also share this video with your friends. Thank you for your support. Today, I read several financial news articles. I've included links to the articles in the description below. I encourage you to read the articles to support the authors and news sources. As a private American citizen, I'd like to report and share my transformative thoughts through commentary regarding small sections of these articles that are of public interest. Today, I read an article on yahoo.com put out by ABC News and written by Elizabeth Schultze, Lindsay Griswold, Emily Lapello, and Ivan Piera, titled Credit Card Debt Reaches Record High in U.S. The authors discussed how many Americans during the pandemic used stimulus payments from the government to help pay off their credit card debt, but things drastically changed once the stimulus dollars dried up. At the end of 2021, 39% of credit card holders carried debt from month to month, but that jumped to 47% in 2023, according to data from Bankrate. I found this information to be very interesting. I am a bit disturbed by this 8% jump in credit card holders carrying debt from month to month. I personally don't think this just has to do with people no longer having stimulus money to pay off credit card debt. Based on everything that I have read, life is getting more expensive and many Americans are relying on credit cards to cover basic costs in life. Because of inflation, many people simply don't have any extra cash left at the end of the credit card billing cycle to pay off their balance owed. I really don't think this is going to change. Even though the Fed is supposedly winning the war on inflation, the prices for many things that Americans need to survive aren't getting less expensive. The authors of this article went on to say the number of Americans missing payments also has increased as the average credit card balance now stands at just over $6,000, which is the highest in more than a decade, according to TransUnion. Here are my thoughts. This is disturbing given how much people are paying in interest to credit card companies for this level of debt. Most credit card companies are charging in the low 20% range, with retail cards charging close to 30% in some instances. Imagine being in a situation where you are paying close to 30% interest for clothes or plastic junk that you bought from some retailer. This could really get out of hand for many everyday Americans. Some won't realize their mistakes until it is too late. Rather than relying so heavily on credit cards, I think people should look for ways to increase their income or look for ways to live further beneath their means. Now here's a bit of interesting information from the authors of this article. Credit card delinquencies are rising fastest among low-income borrowers, millennials, and people who hold other kinds of debt like auto or student loans, according to the Federal Reserve Bank of New York. Well, my friends, student loan borrowers right now aren't being penalized other than the interest accruing for not making their student loan payments. This is because of Biden's on-ramp program, which doesn't expire until the end of September 2024. A large number of student loan borrowers know this, and they are not making their payments. This allows them to barely cover all of their bills each month because they just aren't worrying about their student loan payments for the time being. There are others who are boycotting and refusing to make their student loan payments because they are trying to send a message to the Biden administration in the hopes that their student loan balances will be forgiven. Once student loan borrowers can fall into delinquency after September 2024, I suspect more people are going to be dealing with a financial mess. I suspect we won't just be hearing about these credit card delinquencies rising. We will be hearing about student loan delinquencies rising as well. If we enter an ugly recession, I believe we will also hear about auto loan delinquencies, especially since so many people have larger car payments than ever. This leads me to the next article that I want to share with you. I read an article on Yahoo Finance put out by Go Banking Rates and written by Josephine Nesbitt titled, More People Than Ever Before Are Paying Over $1,000 Monthly for New Cars. According to the author, the share of new car owners spending $1,000 or more on monthly payments hit a new record. According to the automotive website Edmunds, The share increased to 17.9% in quarter 4, 2023, up from 17.5% in quarter 3 and 15.7% in quarter 4, 2022. Well, my friends, this doesn't surprise me since the average new vehicle price is approaching $50,000. Given we are living in a higher interest rate environment, the amount of interest being charged on these loans has also gone up. What makes this all problematic from my perspective is Americans are paying more for car insurance and more for vehicle maintenance. Dealerships have raised their prices for labor and parts, and modern cars are more high-tech than ever, making them more expensive to repair. Some people who can barely afford their car payment will be blindsided at some point in the future when their warranty expires and they have to start footing the bill for repairs on these high-tech vehicles. What will some people do to deal with this? They will rely on their credit cards because they don't have the money to cover the repairs. Many won't be able to pay off the credit card balance owed at the end of the billing cycle. If any of you work for a dealership or if any of you are independent mechanics, let me know if you are starting to see customers who are blindsided by the high price of repairs for their vehicles. While there are likely people who are going to struggle to pay for vehicle repairs, there are some who can't even afford to make their car payments. According to the authors, auto loan delinquencies have increased. This is according to Carl Tannenbaum, chief economist at the financial services firm Northern Trust. I'll share with you an interesting quote. There's been a bit of stress and a spiral where cars are getting more expensive. Some households have to take on ever longer and ever larger loans, and it does get harder for them to handle them. Well, my friends, it is important to keep in mind we are hearing about all of this during a time when our economy is supposedly doing great. Imagine what we could see if and when we enter an ugly recession. You have to wonder how this is going to impact the banks and investors in the long run. The reason I say this is because car loans often end up as asset-backed bonds. You may not have realized this, but U.S. subprime auto bonds surged after the pandemic. These are bonds backed by car loans, which were often extended to customers with weak credit. If you ever want to go down this rabbit hole, it is pretty frightening to dig into what is happening behind the scenes with all of these car loans. I read another interesting article today on Yahoo Finance, put out by Fortune and written by Dylan Sloan, titled, "Soaring Insurance Rates Are Making It More Expensive Than Ever to Own a Car, and the Entire Auto Industry is Feeling the Pain." According to the author, a new report from S&P Global Market Intelligence found that all 10 of the largest private auto insurers increased their rates by double digits in 2023, following big hikes in 2022. The average American driver's insurance payment has spiked almost 27% in the past 2 years. Well, my friends, this is significant. Imagine how this is impacting the budgets of some everyday Americans. If you own a 20-year-old Toyota like me, a double-digit spike is just a blip on the radar. If you are a young guy who owns a newer Dodge Challenger with an expensive premium because of your age and the high-performance nature of that vehicle, a double-digit insurance premium increase could break the bank. It may even be cost prohibitive, resulting in insurance being one more thing that ends up on the credit card, adding to a pile of existing debt. This past year, my car insurance increased and nothing in my life has changed. My cell phone plan also got more expensive. Life continues to get more expensive for everyone. Those who own assets and have seen their net worth increase in recent years are going to be just fine. However, a lot of hardworking Americans don't own a home, rental properties, stocks, or any other assets. Many are just struggling to survive and living paycheck to paycheck. Higher insurance rates are going to stress a lot of American families. Now let's say the young man with a newer Dodge Challenger figures out that he can no longer afford to drive that car and he decides to trade it in for some basic transportation. He may find out he can't do that because he is in a negative equity position. According to the author of this article, new vehicles lost value at an average of over $4,500 a year in 2023, up 24% from the year prior, according to AAA research. I suspect some people who paid thousands or tens of thousands of dollars over MSRP in recent years when cars were in short supply are in an even worse situation. What about people who own a rolling video game? I think some of you know what I'm talking about here. I'm talking about an electric vehicle. The author of this article said an Auto Trader report released last month showed that on average, new electric vehicles lose half of their value in just 3 years. The report also noted that higher depreciation rates are doubly painful for customers because dealers pass on those costs by financing new EVs at higher rates. I hope some people who bought an electric vehicle plan to keep it for a long time. Depending on the make and model and the economic climate at the time of trade-in, this could be very painful. Imagine how much worse this could potentially get in the future if automakers start slashing prices further on some electric vehicle models in order to get them sold. Many automakers are struggling to sell EVs. Just watch my video from yesterday where I talked about how Ford is slowing production of their Ford F-150 Lightning due to demand. Do you know people who are in a terrible negative equity position in their vehicles? Do you know people who are struggling to pay their car insurance? If so, tell me about it in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. Check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.